Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. I'm super stoked to have David Anderson, the co-founder and chief product officer of Tandem, on today.
I believe that payments will start to get more unbundled so that everybody can enjoy sort of the cost plus pricing model that all of the really big guys get to take advantage of. Brands out there in the ecosystem today are unhappy with the current solution. You look at this tool that all of the big boys have available to them, and it sort of becomes this opportunity to say, someone's going to figure out a way to bring that product construct to the quote unquote masses. And we felt like, what better time than now to go revolutionize the way payments work for online brands. And so that was really, I think, the jumping off point for us. It takes about 20 minutes for brands to spin up a Tandem program and to get it live on their site and to start offering that product to customers and reaping the benefit. I think if you're operating your lending business in a very compliant manner, it makes you deliver a better end customer experience today because you're able to satisfy the needs of that customer in a much more deliberate and straightforward way. Identify the problems that will kill you first and get really, really smart on how you want to solve those problems. It's easy to get caught up in, there's a million things I could spend my day doing. When you're running a small company, by definition, there's just a lot of jobs to be done. I think identifying where the leverage is and what can move the needle for the business is the number one priority, and it has to be the number one priority for the entire team. I do think you're going to start to see, though, more products come to market from upstarts like Tandem that provide more of that price power back to mass market brands. And I think really Pay by Bank is a great example of that. I think Tandem has the best Pay by Bank adoption rate of any player I've seen. I think a lot of what AI is right now is like a really luxurious search engine and a very expensive search engine.
Here's a quick message from the Accrued series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out loanpro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. Welcome to Accrued, the Fintech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, optimization, modernization, and personalization through the insightful conversations with the industry's best. I'm Ted Huff, here with my co-host Colton Pond. We'll be guiding you through this intricate lending world. Whether you're deep into lend tech or just intrigued by how technology is reshaping lending, you're in the right place. Now let's dive into another episode of Accrued. Colton, welcome back, man. I'm super stoked to have David Anderson, the co-founder and chief product officer of Tandem, on today.
Thanks, Ted. It's going to be an awesome conversation today, so I'm excited to dig in.
So let's go ahead and dive into David Anderson's story. With over 14 years in the financial services, David is not your average executive. He's the co-founder and chief product officer at Tandem, where he's building a platform for merchants to create branded payment products. Now, before Tandem, David was knee-deep in the consumer loyalty space. Now he's taking that expertise and applying it to revolutionize how businesses handle payments. Tandem's mission, you ask? Well, it's to give merchants the power to offer their own branded payment options while slashing payment processing costs for merchants by a whopping 80%. That's money these businesses can be used to reward their customers or keep those customers coming back. David's approach is all about care, transparency, and speed. He's built a team spread across the country, united by these values. They're working on making shopping better for everyone, both the merchants and the customers. So next time you're out shopping and see a new payment option, it might just be David and Tandem working behind the scenes. They're changing the game in payments, one transaction at a time. David, that is some pretty exciting stuff, and I am so happy to have you on today.
Awesome. Ted, I appreciate that amazing intro. You did a great job there describing what we do.
We like to say that Ted is the ultimate hype guy. He's the guy you want to take with you around and like, just give my intro before all my meetings. A quick 3 to 4 minute intro will do. But David, it's very, very good to have you on the show today. I know when I first met Tandem and got introduced to Tandem, I love the solution because it's a solution where win for Tandem, obviously, because you're distributing your product, but win for consumers and win for merchants, right? And how to drive more efficient payments across the board is crucial to lending and all things outside of lending too.
Yeah, we like to say we're democratizing payments. You hit the nail on the head.
You know, I did my best to do my version of your background and how you got here, but how about you share with the rest of us a little bit more about your background in lending and credit products and how that 14 years plus in financial services has really helped mold what Tandem is today?
Yeah. I mean, to Colton's point, Ted, I might bring you on our sales calls to do our lead in. But so prior to Tandem, I spent almost 15 years at Capital One in a variety of businesses. So spent time in auto finance, in card partnerships, which is co-brand and private label credit cards. And then my last role was in new product development for a buy now, pay later. So I've gotten to see pretty much all aspects of consumer lending products. Had a lot of fun at Capital One. It's a great place, but I've always had that entrepreneurial drive. And so about 3 years ago, left to co-found Tandem with 2 other colleagues. And as you guys mentioned, we're out to offer a branded payment platform for merchants to power better solutions for their end customers.
I love it. So diving a little bit into your background, David, one of the things I love about your background, as you said, is you had experience at Capital One across various different lending models and credit models, right? And then at Tandem, y'all are really looking at payments and how to revolutionize payments, but there's a unique lending aspect to it as well. Help the audience, if you would have mind, set the stage on Tandem's unique model and what that looks like, combining payments and lending together.
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
Yeah, you bet. So a lot of this actually started during my time at Capital One. That formed a lot of the thesis for Tandem. I spent a long time in card partnerships, running some of the largest private label and co-brand card programs in the country. So Kohl's, Neiman Marcus, Bass Pro Cabela's. Got a chance to see up close the value that those programs create, not only for Capital One, but also for the brands that we worked with and ultimately the end customers. There's a lot of exciting things you can do when you take some of the middle players in the payment processing value chain out of the equation. And so at Tandem, what we're building is a closed loop network for the brands that we work with, where we partner directly with those brands to offer both credit and pay by bank products to power more exciting experiences for their end customer. So it's really taking a lot of that learning that we saw at Capital One and bringing it now to a larger audience through our platform that's really built to serve direct-to-consumer e-commerce businesses.
What was that aha moment for you like? I mean, you spent a long time at Capital One, right? And you did a lot of really cool projects and products and launched over there. Kind of help us understand what that aha moment was where you're like, I got to go do this. I got to go build whatever the code name was for Tandem before. I got to go build code name X.
And if you want to share the code name.
Oh, man. Naming a company might be harder than actually starting the company. So I won't bore you guys and the audience here with all of the terrible names that we passed up. But I'd say the aha moment was when you look at the fees that merchants pay to process payments through traditional rails, Visa, MasterCard, all of those sorts of networks. Those fees only seem to ever go up. And when you talk to brands, it's one of the biggest pain points they have. And you don't have to look far in the news to see examples of brands complaining about processing fees. So you take that on one side. You also take a look at all of the legacy retailers. So when I say legacy retailers, what I mean are brands that have been around for decades, multi-billion-dollar brands. They've got stores across the country. All of these brands that can have a branded payment method do. Target, Best Buy, Amazon, Walmart. I mean, you go down the list.
Starbucks.
You look at
Nordstrom.
Starbucks, it's another great example. Nordstrom. When you go down the list, it's over 80% of the top 100 retailers in the country that have a branded payment product. You have this equation where brands out there in the ecosystem today are unhappy with the current solution. You look at this tool that all of the big boys have available to them, and it sort of becomes this opportunity to say, someone's going to figure out a way to bring that product construct to the quote unquote masses. That's where we saw the opportunity at Tandem is we have the expertise. We've run these programs before. We sort of know the levers to pull. And we felt like what better time than now to go revolutionize the way payments work for online brands. So that was really at the jumping off point for us.
David, one of the core aspects, this is episode 15, 16?
Yeah, somewhere around there.
One of those numbers. We'll figure out which one when it comes out. But yes, around 15, 16. But one of the core themes over the past 14 or so episodes has been the need to modernize an infrastructure to be able to launch truly dynamic, unique products. And I'm curious your take here, having spent 14, 15 years at Capital One, and I personally consider Capital One of the more innovative financial institutions, one of the more modern financial institutions. But really, why is a modern tech stack and infrastructure so crucial, especially for you all as you're revolutionizing payments and what that looks like?
Yeah, it is incredibly expensive to launch these programs at legacy banks. To your point, Capital One is probably at the forefront on some of the innovation or the sort of tech forward approach. But even at Capital One, it would take us 12 months, a lot of money. Won't share the specific numbers, but it was an endeavor that required hundreds of people. It also required a lot of resources at the brand. With Tandem, we have turned everything. We've productized everything. We've built the platform that I wished I had at Capital One. And to give you an example of what I mean by that, I've actually launched a brand on airplane Wi-Fi. So number one, that Wi-Fi is not great. It's pretty spotty. But number two, it takes about 20 minutes for brands to spin up a Tandem program and to get it live on their site and to start offering that product to customers and reaping the benefit. And obviously there's a lot that goes on underneath the surface in terms of the technology stack that we've built. But when you talk about opportunity, I mean, it's better, faster, cheaper with Tandem than with the legacy incumbent players. And so that's how we differentiate on that side of things.
I'd love to understand the side, and Colton, you touched on it just a little bit ago as well, is that you're blending credit products with the traditional payment pieces of it as well. How are you presenting that to the merchants as a means to move them forward, to reduce the cost, increase loyalty? There are a lot of programs out there that claim, and I'm going to use air quotes for those who can't see me on the video, claim to reduce the costs, but all it does is just shift it from one place to another. Help us understand how you're truly reducing the overall costs and complexity for these merchants.
I like to say we have one of the few products out there that a CMO and a CFO can love. And the reason for that is because on one side of things, we help grow revenue. So when you launch a Tandem program as a brand, what you're giving customers the opportunity to do is to self-identify, say, I am one of your best, most loyal customers. I want your branded payment product in my wallet. I'll go through a short application process to actually do that. And so I am motivated by the points, the perks, the benefits that come along with that, and revenue goes up. And every brand we've launched, we see clear incrementality at the customer level, both before they adopt Tandem to after they adopt Tandem. So we know we drive incremental revenue for the brand. On the back of that, every time those customers come back to shop with the brands, they're taking advantage of much lower processing fees with Tandem. So our rates are 1% or less, whereas traditional rails are 3% plus. So you grow revenue on one side of the equation, you reduce costs on the other side of the equation. We're one of the most efficient, from a margin perspective, one of the most efficient strategies a brand can deploy. And what's so interesting to me is you don't have to believe me. If you go just read Target's quarterly earnings, they literally say in their earnings every quarter, the Target Red Card, which is their branded payment method, drives clear incrementality for Target. And that's why we offer it. And when you go do the math, it's roughly 30% of their earnings every quarter that can be attributed back to the Red Card. That equation is true for all of these big brands. That's why they all offer these programs. And so that's sort of going back to the CMO and the CFO. That's where we really feel like we have a unique advantage because we are growing top line while reducing the cost footprint required to basically deliver that outcome.
So David, let's take a step back for a little bit. Let's talk about, I'm curious your take, the general payments industry and what's going on in the payments industry, right? And Tandem fits squarely within it. And I just made a connection that I think is interesting as you were talking a little bit about the closed loop system. So interchange, generally debit interchange is declining because there's increased competition, whether it's pay by bank or stuff Tandem is doing and others, right? Credit interchange is decreasing, but generally maintaining a much higher rate relative to debit interchange. And then you have folks like Visa, who at Visa Payments Forum announced their flexible credentials product that is not ready for the market yet, right? But conceptually working on where you can essentially use a card as an access point to access any means of payments or things like that. Help us understand your perspective of the payments industry today and where it's headed, like what that future direction looks like for payments.
Look, if I had a crystal ball, I'd be doing something different. But my belief is we're going to see an unbundling of payments. For most brands online today, exclude the big brands, but for the broad spectrum of retailers, whether it's online or in-store, they pay blended rates for payment processing. So if you go sign up with Stripe, I think it's $2.9 plus 30 cents to process any transaction. There's obviously a great efficiency play there, especially if you're a smaller player. You get everything out of the box. You know, it's a simple installation in the code base. But underneath the surface, to your point, Colton, debit is much cheaper. Credit is more expensive. I believe, and you're starting to see this with Pay by Bank, I believe that payments will start to get more unbundled so that everybody can enjoy sort of the cost plus pricing model that all of the really big guys get to take advantage of. Amazon's not paying $2.9 plus.
No.
They're paying whatever debit rate is plus a little bit. They're paying whatever the credit rate is plus a little bit.
Yes.
Of course, Amazon has pricing power that's unique to them.
They got a little bit of leverage.
They got a little bit of leverage. That's right.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
I do think you're going to start to see, though, more products come to market from upstarts like Tandem that provide more of that price power back to mass market brands. Pay by Bank is a great example of that. Tandem has the best Pay by Bank adoption rate of any player I've seen because we are merchant branded. I think one of the things that some other players may have struggled with a little bit is customer adoption, because you got to figure out a way to make it valuable to the customer.
Distribution is a big...
Yeah. The customer doesn't care if the brand is paying a lower rate. You have to make it valuable to the customer too. But as people start to figure those things out, I do think you're going to see more unbundling.
4 or 5 years ago when I worked at MX Technologies, the bank aggregator, there was some buzz in the industry around pay by bank. I'm not going to offer pay by bank. I'm like, y'all, I think about myself personally. You got to like incentivize me to do something, right? Like, I'm not going to just decide I'm going to link my bank account pay by bank. When I have my American Express, it gives me Delta points and Delta rewards and access to the Sky Club and various things like that, right? So where I think we've evolved is exactly what you said, David, on understanding what are the mutual benefits for the end customer and for the merchant together.
Absolutely right, Colton. I'll give you an example of the type of quote unquote value that a brand can offer. So imagine Netflix offering a Netflix pay by bank. If you could get an extra screen for free, I mean, to go through the friction to one time set up that bank linkage to get something for free, really low marginal cost for Netflix, high marginal utility for the customer. It's a win-win because then Netflix has that customer set up on an auto pay that comes right out of the bank account, which is 8 cents or something like that, versus the 3% plus they're going to pay Visa, MasterCard through the network. You have to figure out a way to make it valuable to the customer. It's not enough just to offer another payment button at checkout.
Oh, talk about payment buttons at checkout. Holy smokes. Like I was on an electronics and photography store to not be named. And when I went to check out, like there were probably like 20 or 30 different types of payments that I could choose from. Now, mind you, I think it's more regionally and they just generically threw it up for everybody versus looking at IP address or me or what have you. But it was really interesting to see because I was seeing payment methods that are only available in Australia, payment methods like Ideal that are in the Netherlands. And then you've got, the US versions and connect your bank account. And oh, by the way, you click here to apply for our store branded card and don't pay the sales tax. So it's like all of these like messages going on all at once everywhere. We're getting to a point of checkout button fatigue, where it's like whichever one is the one that I use all the time is the one I'm going to use. And it's really, really hard to incentivize people to use a new form of payment. And this is something I've talked about before as well, is that the distribution model, which it sounds like Tandem has really figured out a way to distribute a new way of accepting that form of payment, to extend a little bit of credit, to go ahead and use that as one of the incentives to get that customer loyalty rolling. Where I run into a place where I would love to get your insight on is when you stop looking at it as just a form of payment and you start looking at it as a line of credit, what are some of the things that you at Tandem had to think about, and what are some of the pieces you had to overcome with some of your first customers?
At Tandem, we think we're really well set up to win that NASCAR experience in the checkout. And as brands start to rationalize the 20 to 30 payment options, we believe Tandem will be one of the last ones in the checkout. And there's a few reasons for that. Number one, we are merchant branded. So, we are one of the only options for a brand to continue to present their logo in the checkout. That's really important. Number two, to your point, Ted, one of our products is a credit product. For better or for worse, Americans love to spend on credit. And when done responsibly, that's a great thing because it does offer the opportunity to power rewards, which is the third leg of the stool for us. The offer that a customer shopping at a Tandem brand will get paying through Tandem is better than any other offer the brand might be offering. So to unpack that a little bit.
You talk about it being a different experience and it being that merchant branded piece of it. And I kind of hinted towards another one that's using the don't pay sales tax when you use our branded card. Can you help us unpack the thought process around the offers and what kinds of offers and how that maximizes not only the use of credit, but the repayment of that credit.
We like to tell a brand, we're never going to take over your entire checkout. We're never going to be, the payment option for 100% of your customers. But your best customers are going to prefer this product because it has your logo and it offers the best rewards. Now, when it comes to the repayment side of things, customers feel a connection to that brand because, again, it's one of the most loyal customers at the brand that's adopted that payment method. And so we do see customers they're very keen to repay the product or the Tandem product for the brands that they participate in. Because, again, if they go late on a payment, they don't get to take advantage of the rewards. They can't transact anymore with the product. So it provides a sort of tailwind, so to speak, with the repayment side of things. Because, again, there is that affinity and there's the ability to use the rewards when they come back and shop again.
Let's take 2 steps back real quick, David, and talk about credit. Ted brought up credit as one payment method, and you highlighted astutely that, Americans like to use credit when paying for things. You can look no further at Affirm and Klarna and the big BNPL providers to credit card providers and what that looks like. From your view on the industry, what are the biggest pain points that folks are experiencing today within credit? And how are you thinking about solving that? What does that look like?
It is very hard to responsibly extend credit, particularly as a fintech startup. It is a business that is designed for scale. And as you start out, that obviously is that's not the equation that you're sort of solving, right? I'd say there's a couple of key challenges. Number one, there's regulatory and compliance overhead that you cannot mess around with. It is your license to drive, and you will get your license taken away so fast. Synapse of all, there's plenty of examples right now where the license is getting taken away. Being responsible on the regulatory side of things is one piece of the puzzle. On the other side, you have to be a responsible extender of credit. You have to know who to issue credit to, how much you should issue, and frankly, who isn't a fit for the product. And as you think about being a startup, turning away business is really hard. You need to grow to survive. That's your oxygen. There's this natural tension in a lending business where you can't serve every customer that walks through the door. So those are some of the things that start to come into play. And that's why finding great technology partners is a really important piece of the puzzle, because it can help unlock some of those things for fintechs.
So I have to ask the question, how did you overcome that hurdle that we just talked about of the access to credit lines, access to capital, access to offering that out? Is that something you're looking to your brands to provide, their brands to go out and gather, or is that something you come to the table with?
Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Tandem comes to the table as a one-stop solution for brands. That is a big differentiator when you look at what we offer versus a little bit older players like a Marqeta, for example, where you can issue products through Marqeta, but you have to bring all the program management, you have to bring the credit policy, the credit strategy to the table. Most brands are not set up to do that. That is a completely different set of expertise. So with Tandem, we bring all that to the table. All the brand has to bring is their brands and the customers, of course, and the equity associated with that brand. We bring the credit policy, we bring the lending capital, we hold the risk. So for brands looking to offer some form of payment method, we're a one-stop solution.
David, you bring up a great point on the regulation side, and I'm curious your take here. One, the general take is that the restraints are not going to be loosed anytime soon, right? It's only going to get stronger and stronger. We've seen several consent orders over the past, call it 2 weeks, with Evolve, with Stride Bank, with several others within the industry and what that looks like. I'm curious y'all's thoughts on how you're focused compliance as a strategy and what that looks like? Because as you mentioned, the brands do not have the expertise. They're not financial services companies. They are retailers, right? They are selling products. They're not focused on all of the scrutiny that comes with compliance and regulatory compliance within financial services. So how are y'all thinking about that? What that looks like?
Compliance is got to be part of the strategy from day one. And I feel like we have an unfair advantage given the long time we spent at Capital One, where compliance is part of the DNA at Capital One. And you don't see Capital One showing up in the news for compliance missteps like some other people. So we at Tandem, we take it very seriously, the obligations that we have to our bank sponsor partner, to the different regulatory bodies that do oversee us, and ultimately to the end customer. Like, let's keep in mind, like, this regulation is there for a reason, and it's to protect customers from really bad outcomes. If you're operating your lending business in a very compliant manner, it makes you deliver a better customer experience at the end of the day, because you're able to satisfy the needs of that customer in a much more like deliberate and straightforward way.
I want to shift gears a little bit, David, and what I love about your background is 15 years at Capital One, traditional financial institution. We mentioned one of the more innovative ones. I 100% agree with that. To starting a company with two other co-founders, right, David?
Correct, yeah.
With two other co-founders from the ground up, with nothing but like, let's just roll up our sleeves and get shit done, which is an entirely different view than all the resources Capital One has. So I'd love your take and perspective on advice that you would give. You're now about 3 years in. Advice you would give to folks starting a company and what that looks like, and what are the key lessons that you've learned over the past 3 years if you've shifted from working in Capital One to co-founding Tandem.
Man, how much time do you have?
You got as much time as you need. Let's go.
Let's go with like the biggest piece, right? Like, what is the biggest piece of advice? Like, if there was only one thing you could offer, what would it be and why?
Identify the problems that will kill you first and get really, really smart on how you want to solve those problems. It's easy to get caught up in, there's a million things I could spend my day doing. When you're running a small company, by definition, there's just a lot of jobs to be done. Identifying where the leverage is and what can move the needle for the business is like the number one priority, and it has to be the number one priority for the entire team.
So I'm gonna hit you with a couple rapid fire ones. Just first thing that comes to mind, when you look at the marketplace today, what is the most exciting innovation in fintech right now?
Outside of Tandem. Outside of Tandem. No bringing up Tandem. Outside of Tandem.
That would be cheating, right? I'm pretty excited by some of the new technologies that are coming out on the customer onboarding side of things. There's a company called Footprint. What they're doing to build portable identity and how that identity gets bound to a specific customer, I think is really cool. And if you think about them almost like the plaid of identity, that becomes a really, really interesting product. It's a big swing. It's a tough one to pull off, but it's a great team.
I got one quickly. AI overrated or underrated, and why?
Heavily, heavily overrated. AI is a tool. AI is a tool like Excel is a tool. And look, I use AI in a number of different capacities. So for example, like writing code to get you to like 80% completion right out of the gate. Great tool. To replace knowledge workers, like, give me a break. It's just, I have a tough time seeing how that happens. I think a lot of what AI is right now is like a really luxurious search engine and a very expensive search engine. So look, like, I'm wrong all the time, and I'll probably be wrong about that prediction too, but until some of these AI companies start like proving out an actual business model that it can be profitable, I'll take the under. Though it absolutely has interesting use cases, but I think they're more narrow than what people are maybe thinking of today.
Yeah, it's funny you bring that up because it seems to be a theme that everybody talks about. It's really good at identifying patterns or pulling out information that has already been given or any of those things. But the things that it lacks right now is that intuition, that rationalization, that being able to I pull very unrelated things together to come up with an outcome. And that's the piece that really we as humans excel at. And I will it ever get there? Maybe. I hope not too far. But it is possible. But I think that's kind of where you were going with that piece of it. You'd started off earlier in the conversation by saying you don't have a crystal ball. So what I'm going to ask you to do is hop in a DeLorean, get into a hot tub time machine, go ahead like 5-10 years into the future and come back and tell us what are the big things that are making a difference in lending and in payments in the next 5 to 10 years.
Unbundling of payments is going to be a big trend because brands are looking for levers in their business to create more margin. And payment processing is a really big line item today that I think a lot of brands don't have tools available to them to drive a different outcome. So whether it's pay by bank, whether it's merchant branded payment solutions like Tandem, something else I haven't even thought of because I'm still in the future, I haven't come all the way back yet. Like in the next 5 years, you're going to see a lot more technologies and solutions come to market that give brands the opportunity to drive the cost of payments down because there's so much margin in that business today. I mean, Visa is one of the most valuable companies in the world, and they're skimming off the top of every single transaction that happens, which great for them, but I don't think that equation can hold forever.
That brings us to a good wrap, actually. What I love about this episode is we took a step. Rhett, our CEO, often talks about this zooming function of going down to the details and up and down. We took a step up from generally where we usually talk about lending and credit to talk about payments in general and the work that Tandem is doing. So I have one last personal question that I know the audience wants to hear. I know that you live in Chicago, right? Favorite pizza place in Chicago is what?
Oh boy, there's a pizza place in Chicago called 5 Squared, which up until recently you could only order through their Instagram. Dave Portnoy just did a review, so I'm sure they're about to blow up. But it's Detroit style. I'm not a fan of Chicago deep dish, so that's a hot take for you. Yeah, I don't know many Chicagoans. That are, to be totally honest, but. 5 Squared. If you're in Chicago, go check it out. It's really good pizza.
Love it. Ted, that wraps us up, man.
Well, David, thank you again for coming on and really walking us through how Tandem is changing the way that credit, lending, and payments are being done for all of these brands to move themselves forward. So thank you so much. And well, that does it for another episode of Accrued, a Fintech Confidential series presented by Loan Pro. And if you've made it this far, go ahead, hit the like button, share, subscribe, do all the fun stuff, let everybody know about it. And if you haven't already, go ahead and go to fintechconfidential.com/access to be notified of every new episode and all the great information that we're sharing today. And as always, keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.